Looks like Meta is taking all the top talent from OpenAI. This list just came out in the last day or two, talking about how Zuckerberg, obviously the CEO of Meta, Facebook, all of that, introduced Wang, who will be the company's chief AI officer and leader of MSL, as well as former GitHub CEO Nat Friedman. Friedman will co-lead the new lab with Wang with a focus on AI products and applied research. So this doesn't include employees who joined from OpenAI's Zurich office, but look how many of them came from OpenAI. You have 1, 2, 3, 4. These top 4 are all people who worked on models for OpenAI, GPT-4, etc. You have someone from Anthropic, previously at Meta for 11 years. You have another one from Gemini, who worked on those models like Gemini 2.5, co-creator of GPT-4o, 4o Mini, etc. Former Google fellow, contributor to Sesame. So you have a lot of different people, especially from OpenAI. The vast majority of these people are all from OpenAI, with 2 or 3 others from Anthropic, Gemini, and things like that. Another thing about these is most of these people that they added had a huge part in the last 12 months of OpenAI's success and their new models. So let's look at how Meta is doing right now. This could be very bullish news if you're interested in Meta stock. Today, they were up 0.76%. If you look at the past 6 months, up 18.92%, which is solid. Year to date, almost 20% in a volatile year for many companies. Up about 41% in the past year, and up 208% over the past 5 years. To compare that to the S&P 500, they're pretty much beating the S&P 500 all across the board. Their PE ratio is a 28.09, which isn't super low, but it's also pretty good considering it's a tech stock that's had pretty decent returns. They do have a dividend yield. It's not a high one, of course, but you're not necessarily buying this one for dividends. You're buying this one for growth. 0.29% dividend yield. Look at the year-over-year quarterly financials. They look really good. Up 16% on revenue, about 35% net income, diluted EPS 36.52%, and net profit margin up almost 16%. March 2025, they beat EPS by 23.53% and on revenue by 2.3%. If you look at their year-over-year financials, they look really good. Balance sheet, price to book, 9.73. Now, if you look at the traditional or the historic price to book ratios, which I do have a page on my website that lists all of them for different industries, you can compare them to their historical industries. Technology and software is what Meta would typically be classified in, which could be anywhere from like 5 to 15 plus as a typical PB ratio. It can skyrocket if they have high earnings potential and few tangible assets. So not necessarily the best indicator in the world, especially for a tech company, but they're right in the middle of that typical range. So it doesn't seem like any bad news there. We do have a lot more customer volume. Well, it's increased by 3% versus the last trading day. But again, this is a daily trading volume graph here specifically for Robinhood customers. Hedge funds, usually a little more telling. But if you look at the last quarter, more of them were buying than selling. Insiders, you do have some that are selling their shares of Meta in the last 3 months as insiders, but a lot of times these are just like 1 or 2 individuals or just a very small sample size of people. So it's hard to really tell what to make of that. Now, as far as analyst ratings, because you have 73 analysts here, this makes a lot of sense to at least give a look at. If you look at 73 ratings from Robinhood analysts, 86.3% gave Meta a buy score. Hold right now, they have a 12.3% score, and 1.4% of them give them a sell score, which is probably like 1 or 2 of these 73 ratings. Earnings wise, they've been beating pretty much every single quarter for the last year and a half when it comes to earnings. I like to know how well an organization seems to be run, and obviously people have their opinions on Mark Zuckerberg. He's kind of a polarizing figure in some ways, maybe not a big outspoken or big personality kind of guy, but I mean, they've obviously had their controversies over the years. Some people like him, some people don't. But when it comes to how they do with their company, how they run their company, I'm more concerned about what their employees think of them rather than the general public. So 3.8 out of 5 stars. They have one of the best places to work. They have many different Glassdoor awards over the last couple decades for being a great place to work. I do actually think that's quite important. They do also have 67% recommending working here to a friend, which is actually, it's pretty solid. It's not top tier, I would say, but it's pretty solid. And 58% approve of the CEO. A little bit over half, could be a little bit better. They have had times of mass layoffs and maybe some comments about AI replacing some mid-level engineers recently. But as far as generally, their reviews are not too bad. As far as the Meta PEG ratio, which is the forecast 12-month forward PEG ratio, which is another indicator I like to look at, as well as many other investors like to look at, just as one small indicator in a larger pool of indicators. They have a pretty solid 1.75. It's not too far over a fair value of 1. Typically over 1 is a little overvalued, but if you look at most of the tech stocks right now, you're not going to find a lot that are under 1 right now, which could be a sign of the market as a whole, which many people think that the market as a whole will be hitting a downturn anytime, but people are always predicting that because things like that get clicks. So individually, this doesn't seem too outrageous for the PEG ratio. If you look at, say, something like Tesla as a comparison, theirs was like over 11, which was quite terrible compared to many of the other stocks that have been doing well in tech the last few years. So a few things to maybe look at if you're trying to convince yourself whether you should buy, hold, or sell. Obviously, this is not financial advice. This is just a few things maybe that you might consider in each category. So if you are trying to convince yourself of whether or not to buy stock in Meta right now, like I said, they're acquiring some of the top AI talent. It's not just, random people from different companies. It's people who have worked at one of the clear leading AI companies in OpenAI and had a big part of their success over the last 12 months and their newest models. And you're also talking about they've had great returns. They beat the S&P 500 pretty easily over the past 5 years. And in each significant time span, which you look at, if you look at, say, last 5 years, last 3 years, last year, the last quarter, they look pretty good all across the board in terms of returns. Investors who have held Meta stock have probably been pretty happy with them. Foundation of Facebook and Instagram, of course. So they will always be one of the top leaders in digital advertising because they have so much information on people, and 2 of the top social media platforms. Now, maybe some reasons to hold. The AI race is a tough one right now, of course, as we all know, but securing some of the top talent, even if he seems to have to overpay a little bit, may help them close the gap in that area. But a lot of people see OpenAI versus Google Gemini as kind of the top 2 in the race, with maybe Grok and a few others trailing. But Meta glasses are kind of a maybe right now. They're trying to sell the idea of these glasses, these augmented reality glasses that kind of blend digital with the real world. And they're supposed to be sleek and look nice and have this partnership with Ray-Ban. These haven't necessarily caught on yet. Obviously, you're going to have to get these to be sleek, to look nice, and to also get the price to be affordable enough and the technology to be interesting enough for people to actually want them. And then, does anyone care about Facebook anymore? Obviously, people have their opinions on whether or not Facebook is for mostly old people at this point, or whether or not people even like Facebook anymore. And then maybe some arguments for selling. They failed with metaverse. Obviously, the whole virtual reality metaverse that Mark Zuckerberg poured billions of dollars into just did not catch on. The whole VR system thing just wasn't ready yet, and people were not prepared to give up their typical consoles and other and their gaming PCs and things like that to convert to metaverse devices. Glasses are not necessarily catching on yet, or from what I can tell, it could possibly get to that point later on. And then, of course, they had some shady election issues. Obviously, he's had to appear in court, that being Mark Zuckerberg, for issues regarding some of what was going on on Facebook during the election and a few other things. So you could kind of convince yourself one way or the other. Right now, my process gives them a buy score. I think they're going to be just fine right now. I think they've been one of the top tech stocks for the last few years. I think that they do have potential to hit some major strides in some of these areas. If one of these ideas takes off, whether it's the Meta glasses or whether they close the gap on some AI products, they could take another jump and solidify themselves as one of the top tech companies going forward, just as they have been over the past few years. But obviously, that's just the way I think about it. This is not financial advice. I don't know your specific situation. I don't know your risk tolerance, and this varies from person to person.